Hi, everybody. Welcome back to my channel. This is Oliver Wiedmaier at Ollie_all caps on Twitter. Today, I'm going to cover position size, risk management, entry tactics, and exactly what tools I use when trading momentum bursts. And I like to trade open range breakouts. And so I'm going to explain using an example of a trade I took today in YEXT, exactly how I got into the trade and how I stayed safe from getting shooken out during the open range. So the first thing I'm going to show you is the chart of what I traded today and go over a few things, and then I'll go over the tools that I used. Okay, so this is the chart that I traded. The ticker is YEXT. Yesterday, it had a 18% gap up. It made the highest volume ever at 1,600% volume. And then today it began breaking out above the close of yesterday. And so what I like to call this is a high volume close, or this would be the high volume close, second day trade. When it breaks above here, the high of the day, second day play. But essentially, this is an EP, an episodic pivot, and I like to trade the next day, taking a position off of the close. And so you'll see my entry was 1332, which is just 5 cents above the close here. And if we look at a 5-minute chart, and we can see the green line is my entry, the red line is the stop loss. Now, I did not initially have a stop loss here. My stop loss was much lower, and I moved it up once the opening range was done and settled with, and the low of the day was established. Then I moved my stop loss. And so that's what's very important. And that's exactly what we're going to go over. And so this trade was planned yesterday. So once the stock made the episodic pivot, that is gapping up above 5%, with above average volume, I'm going to, after the market is closed, I'm going to find these types of moves, and then I'm going to either set alerts, or I'll set entry, like buy limits. And that's what I did, exactly what I did here. And so what I did was I planned this trade out. So I had a small position right off of the close. Initially, my stop loss was here at $12.68, because this level clearly is an important level that the institutions who are making this great big move wants to defend this level. So last night, I planned the trade so the distance between the entry and this level here equaled to 0.12% of my account. Now, how do I do that? Okay, so if you go over to my Twitter, on the pinned tweet, there is a position size calculator. This will take you to a Google Doc. You open it up, you'll need to make a copy. And here you will adjust your account size. And here you just click here, and then you type in however much money is in your trading account. For this example, let's use $25,000 trading account. So this again is what I did last night. I typed in the ticker, I hit tab. Okay. And so since it was yesterday, it was going to the current price would be the close of the day. And so let's see real quick. So the close was, this is exactly what I did. The close was $13.29. Okay. So we'll do this for an example's sake. We'll go manual. So $13, but I want to do a few cents above. So I'll do 13.35. Okay. And I also want to do a manual here, which means I get to input it. So we're going to manually input based on our 5-minute chart where we want a stop loss to be, which is going to be off of this key level, which is 1264. Okay. We'll call it 1264. So you type in 1264 here. And so now we have our entry and our exit. This is our planned trade. Okay, we know that the stop distance is 5%, which is under our 8% max. And so we have to decide our risk tolerance. So since this is a entry, we're going to go with a 0.12. So you put in the order for 42 shares, and at the open, boom, it immediately hits. Okay, we'll switch this over to extending trading hours. So immediately the trade hits. Bam, it goes up. Okay. And so I don't know that this is happening just yet. So it hits. Okay. At this time, my stop loss is down here. So the distance between my entry and my stop loss, I'm only risking 0.12% of my count. Okay. Now I already know that I'm trying to move this up. This was just an initial position, just like a get in case this thing took off. So at this moment, I'm thinking, okay, I'm going to buy the 5-minute breakout. So I put in a order to buy the 5-minute breakout. So boom, that hits. Okay. At this time, I don't buy. So the first order was 42. Now I'm going to buy half of this. I'm not going to buy another 42. I'm not going to buy 100. I'm not going to buy 50. I'm going to do whatever half of this number is because we don't want to raise our cost up too much. So I bought 42. So now I'm going to buy another 20. Okay. So at this 5-minute breakout, I buy another 20 shares. So um, now I am looking to raise my stop up, but I haven't yet. I want to wait for about 30 minutes, or I want to wait for a clues that the low of the day is already in. So at this point, I have 2 entries. Okay. I'm not risking too much. Okay. I have entry. I have an entry. The entry was 1335. Okay. I have an entry here. Okay, so now I raise my costs just a little bit. Still, I'm keeping my stop loss here. I'm waiting for the open range to settle. Okay, comes up, comes up. I'm thinking the low is in yet, but I don't make any changes because it just is too soon. It comes down here, okay, and starts chopping around a little bit. And I notice about here, I'm watching and I noticed that it's not going any lower. So I'm thinking, okay, then if the VWAP is reclaimed, I'm going to buy another position. But at this point, I'm going to make the position size so the stop loss is here. That's my mentality. So I do the math, okay, and I want to buy at 1336, which is just above the VWAP reclaim. Okay. So I want to make it, but I want to do, when I do this, I want to set my stop loss for 1311. Okay. Because that's going to put in a nice stop loss under the low of the day. So now I need to see how many shares I need to buy for 1311 as a stop loss. So I'm going to put up here 1311. Okay. And so I know I need a total amount of shares of 260 shares total between my entries here and here. Now, I already know that I've already bought 40 and another 20. So I'm already in for 60 shares. So if I want to get to 260, then I need to buy 200 shares right on the VROP reclaim and then immediately set my stop up. So that's exactly what I did. I bought 200 shares here, and then I move my stop up. Boom. Now I'm not risking more than 0.25% of my account, which is what I'm only allowing myself to risk now. And then I know that once I'm at multiples of risk, I can start taking profit. When I'm at $187 profit, I know that I'm at 3R, so on and so forth. And that's how you execute the trade. for the opening range. Now, not every trade does that. Whoa, sorry about that. We can see here, let's take IoT, for example. It doesn't have this gigantic. So I took an entry here. It doesn't have this big candle. So if you look, if you pre-plan the trade out, you are looking for an entry off of the close, but just a few cents above. So we move it up a little bit. Okay. And then we'll go down to the 5-minute. Okay. And we notice that this level here is an area of support, $23.89. So when you're planning this trade out, you want to make sure that the distance between here and here is your risk. And then as you buy up, as the day progresses, you want to wait for the low to be in, and then you adjust your stop up. So the the order's in, it hits, it moves up, it comes down. I notice that this level is holding. So as it's coming back up, now I take a larger position. Okay. So I take the order. I take the position here. I notice that it comes back and it's reclaiming. So now I'm going to take a big position here. So now this is where I want my final position to be. I take a big position here with the math so that the stop loss is at the low of the day, which is here. So now my new stop loss is going to be this 24.12 instead of down here, which is 23.82. But I didn't know that this was going to happen. So I needed to give the opening range time to test any key levels. I don't want to get shaken out by just a little wick. And so you don't know if this is going to happen, or you don't know if it's going to come up and then retest. So you have to give, if you're buying this sort of setup, you need to give it time in the morning to work itself out to get that wick. So that first entry, I'm always doing that first entry at that 0.12, but my intention is to get up to a 0.25. And so that's why this tool is super important, so that I know and I'm calculating exactly what I'm buying. If I want to use a percent stop instead of looking for that 5-minute key support, then you can do it off of 5%, or you can change it to 3% or whatever you have you. But you don't need a big position when these trades move like they do. This moved 17% in 2 days. So you don't need to be fighting and knocking yourself out. Give it a little bit of room, maybe go a little bit smaller, plan your trades ahead of time so that you can capitalize and you don't miss these gigantic moves. I had a question about what do I when I tweet, I made 3R on a trade. Let's see an example here. One of my tweets. Made 2.5R on a 15% position. So that means that this was my 1R. The 1R is the distance between my entry and my stop loss. Now, when I make the multiples of it, boom, 1R, 2R, 3R, 4R, that's when you're making multiples. So this was 3R, or sorry, this was 3R. So the distance here 3 times, 4R, 6R, and it's all based on the math of the entry and the stop loss, and that's your risk. That is 1R. 1R is how much you're willing to risk between the buy and the sell. Okay. Again, if you need this tool, find me on Twitter. It's the pinned tweet. And I appreciate you guys. Take care.